Good morning. You are watching a live daily market outlook for Tuesday, 19th of June 2012, prepared by Windsor Brokers. Initial optimism that was brought by during the weekend's elections in Greece, that result gave some relief to the markets, were short-lived as the next focus and another troubled country in the Eurozone, Spain, comes fully in focus. With their 10-year government bond yields shooting up over 7% and looking and requiring for a bailout. Spain is likely to pay record prices basically to borrow at debt auctions that are due today and on Thursday after, as said, the Greek elections failed to ease the concerns about the future of the Eurozone and amid uncertainty over whether Madrid will lead the full sovereign bailout. As said, the bonds yields hit over 7% levels yesterday, with another quite disappointing news coming from independent source estimation of the Spanish required amount for the covering the banking sector from originally 80 billion euros. Was nearly doubled on yesterday's estimation to 150 billion euros. That puts an additional pressure on the Eurozone and a single currency itself. Yesterday's G20 meeting, yesterday and today, showed that basically the group is under pressure from currently financial markets, market conditions and crisis in the Europe. With the world leaders being anxious about current situations. The Europe agreed to move towards a more integrated banking system to stem a debt crisis that currently threatens even the survival of euro as the currency and the whole Eurozone. The group of 20 summit of the world's leading industrialized and developing economies that is currently in Mexico, and Germany and its big Eurozone partners took the unusual step of spelling out in detail measures to complete the economic and monetary union that launched to great beginning of the Eurozone 13 years ago. Basically about the among the commitments in a draft of G20 communique was a pledge to consider concrete steps towards a more integrated financial architecture in Europe that would include common banking supervision and firm guarantees to repay bank depositors. Just to recall, Germany was basically supporting this idea from the very beginning, as basically this is so far the only way, as most of the countries are having a more or less independent fiscal system without any control from the union, and that basically now caused the current troubles. With Germany still pushing for the more unified and the more strict and controlled laws that should be applied, because all the countries of the Eurozone are having the common currency, and of course if there is a common currency, then should be also the common system that has much more control over the finances and the banking sector to prevent the further crisis as this happened now in Europe. We'll see today what will be the final outcome from G20, whether it's going to be just rhetoric as most of the times in the previous meetings, or some more steps, more serious and workable steps will be taken in order to prevent the disastrous scenario, as the pressure is raising again after a brief relief provided by Greek elections. From today's events we have a number of important releases from Europe and America, starting with the UK. With inflation, most of these forecasts basically today are expected rather to stay unchanged. There's yearly CPI for May from UK is expected to stay unchanged at 3%. Core CPI is forecasted 2.3 versus 2.1%. Retail price index a slight decrease to 3.3% compared to 3.5%, while the home price index is, according to the forecast, is going to be the biggest winner of the biggest gainer, basically, as 0.3% is forecast for today's release for May, compared to minus 0.4% in the April's release. More disappointing outlook is seen for the German and the European zoo economic sentiment, as German forecast for Germany's economic sentiment is 3.8% 3.8 compared to 10.8 of the May's release. Current conditions also forecasted lower, 39.8 compared to 44.1, as well as Eurozone zoo economic sentiment for June, that is seen at minus 5.7 compared to minus 2.4 of the release of May. That shows basically that Eurozone's economy and the Germany's as the #1 economy in the Eurozone are going downwards. From America's Canadian wholesale sales for April due at 12:30, expected unchanged, as well as building permits and housing starts from US due at the same time, with slight change seen on building permits to 730,000 compared to 720,000 in the April's release, while housing starts, according to the forecast, are expected to stay unchanged at 720,000 in May. This was from today's fundamentals. From the technicals, we are going to take a look now in the main currencies and commodities and see the late past 24-hour movements, as well as outlook for today. As said, the initial optimism that boosted euro yesterday on opening with gap higher opening and peaking at 127.45 was short-lived, as immediate reversal pressured by news from Spain pushed the single currency first to fill the gap of the overnight, and then more lower, losing supports at 126.45 and 126.00, dipping as low as 125.57. That was the low of yesterday, posted in late afternoon hours, where the 61.8% retracement of 124.41 to 127.45 ascend so far provided temporary support. Bounce higher as corrective action was so far limited by 55 days exponential moving average just above 126 handle, with the still negative tone seen on the hourly chart, as studies are still in the negative territory, seeing not much towards the upside, unless we see a gain of a strong barrier at 126.65 zone. This was the weekly closing, and the basically weekly closing and the weekly high of last Monday at 126.67, and break above this level would bring some more positive tone into the picture and turn focus higher, with a gain of 127 required to turn focus fully up and look for a test of 127.45, yesterday's high. On the downside, immediate support lies at 125.57. That is yesterday's low, and close to it is 125.44, the ascending trend line of 122.87 low through 124.41 low, and basically break below these two levels would soften the near-term tone and keep the upside out of reach for now, with risk seen towards the downside. 125 as round figure support would be coming next, ahead of another very significant level at 124.40 zone. This is the higher platform of beginning of June, where the pair found good support in several attempts lower before bouncing strongly higher, and basically break below 124.40 is to refocus downside levels at 122, 123 and 122.87. And a brief look at the daily chart, where the studies are pointing higher, and the regain of bullish momentum sees potential for possible further extension higher, as long as trendline support at 125 45. It's the trend line of 122.87 holds the downside. Otherwise, risk will be seen of possibly leaving a lower top at 127.45 in case of losing the trend line support, with loss of 124.40 zone to confirm. As said, the study is still in negative territory, but pointing higher, see potential of further retracement of the down move from 132.82 to 122.87. Sterling holds its near-term positive tone after a break above a very strong barrier at 156.00, extended gains so far to 157.40. This was a peak of yesterday's, after yesterday's opening, and just ticks below 157.50 200 days moving average that so far stays intact. However, brief corrective action lower was limited at 156.29, just close to 38.2% retracement of the up leg from 154.75 to 157.40, with the fresh push higher now struggling at 157 barrier, as more sideways movements seen during the late Asian and early European trading hours. However, the still positive tone that seen on the hourly chart sees potential of possible retest of 157.40 with break above, clear break above 157.00 expected to required to open way towards 157.40. 20 days exponential moving average on hourly chart currently at 156.75 holds the downside there for now, ahead of a more significant 156.45 55 days moving average, and 156.29 yesterday's low, loss of which would soften the near-term tone and look for a test of 156. Basically, loss of 156 level would sideline the near-term bulls and bring the pair back to the previous range between 156 and 154 levels, and the sideline, as I said, the sideline the short-term bulls break above 157.40 and 157.50 as a 200 days moving average is expected to open way for further retracement of 163 to 152.67 descent, and 157.83 50% retracement is seen next, ahead of 158.00 as round figure resistance, and 158.47 22nd of May high seen on a break. Dollar yen has lost traction after a bounce of last Friday's low at 78.60, where the 200 days moving average contained a reversal from 79.80. Gains were capped at 79.40, limited by descending trend line correcting 79.73 and 79.50, with still a weak tone dominating in the hourly chart. So far the downside was contained at 78.85, but this morning's brief break below 79 as round figure support, and the price action holding below the moving averages keeps more focused towards the downside. Loss of 78.85 and 78.80 supports is to turn immediate focus lower towards 78.60 low of last Friday, and 200 days moving average that will be signal, loss of which will be signal of confirming a lower top at 79.80 zone posted on 7th of June, and the possible extension of the broader downtrend from 84.17 yearly peak with the trend line, descending trend line broken, descending trend line support currently at 77.51 and 77.65 previous low 1st of June, break of which is required to confirm and open next levels at 77.36 and 77.00. On the upside, a regain of 79.00 and more significant 79.40 yesterday's highs would be seen as a temporary relief. However, a break above more significant barriers at 79.80 and 80.00 is required to avert immediate downside risk, and open levels on the upside 80.13 and 80.60 for test. And Swiss that holds near-term positive tone after bouncing from yesterday's fresh low at 94.20 following the gap lower opening and extension down to 94.20, where the temporary ground was found just ahead of strong supports at 94.00 and 93.66. As said, bounce higher so far, peaked at 95.62, clearing 95.00 and 95.36 last Friday's high, with 61.8% retracement of the down leg from 96.49 to 94.20 so far, limiting gains as overbought near-term conditions triggered some corrective action. The temporary footsteps was so far found at 95.17, where the 55 days exponential moving average on the hourly chart so far held the downside, but still negative tone seen on the hourly chart as studies are pointing lower despite holding in the positive territory. See risk of further retracement before the near-term bulls come in back in control. Loss of 95 zone actually would be quite risky for the pair, as this would be a signal of possibly leaving lower top at 95.62 yesterday's high, and turn focus down towards levels at 94.77, previous strong support, then 94.40, and finally 94.20. That will open way towards 94.00, 93.66. Ability to hold above 95 at reversal at or above this level is to keep hopes of a possible fresh strength and a retest of 95.62. That will open way towards 96.00 and more significant barriers at 96.56 and 96.75. On the 4-hour chart, the outlook is, I would say at this point, more negative, as 55 days descending moving average is so far limiting the upside, and the current break below 20 days exponential moving average at 95.27 keeps sees more risk of further extension lower. Set break above 95.62 as the initial barrier, and 95.73 our yesterday's initial target high of 14th of June 2012 would be more supportive and prevent pair from further descending. The crude oil again suffered from yesterday's euro's weakness after a brief extension higher following a gap higher opening yesterday, hit 85.80 level, but quick recovery now returned the pair to the initial range that is now limited by 85.80 on the upside and 82.34 on the downside. This was the low of yesterday, ahead of a broader range that is defined by 81.10 and 87.00. Still more negative tone seen on the short-term charts, as 1 and 4 hour studies are still in the negative territory and keeping the downside more vulnerable for possible revisit of 82.40 strong support zone, loss of which to open way for more significant losses, 82.00 and finally 81.19, 81.10 previous lows for retest, as upside so far remains limited in the near term at 85.80. As said, more focus seen towards the downside. Only break above 85.80 is to provide near term relief, but clearance of the recent range top at 87.00 and 86.60, that also marks a 23.6% retracement of the down move from 106.41 to 81.10. would prevent the pair from oil price from further falling and allow for some stronger corrective action with the 90 zone seen as the next target in case we see the clearance of 8700. Larger picture outlook remains still weak as bears are fully in control, and as long as initial strong barrier at 8700 holds, the upside more focus seen towards the downside. Loss of 8110 to open. Next very significant support. First comes 8100 as the nearest one, and then 8000 as a strong psychological support. And finally, quick look at the gold as the recent 8 days rally is now penetrating through the daily Ichimoku cloud. That gives more support for the recent price action as the gold price is approaching first strong barrier at 1640. Brief dips seen on yesterday's opening were so far contained at or above 1600 level, and the yellow metal continues to tick higher. It's a steady, slow but steady gains in past couple of days of recent higher low at 1555 and the critical support zone at 1530-20 area. Important was a regain of 1600 as initial barrier, and now 16 break above 1640 is to provide more relief and prevent gold price from further sliding. A break above 55 days moving average at 1614 is now approaching 1640, and 1648 55 days moving average ahead of more significant barriers at 1671 high of 1st of May, and just above it is 1672, the 200 days moving average, a regain of which we'll see some more supportive tone for the gold after it tested a critical support zone at 1530, now attempting to build a triple bottom at this point with the regain of 1670 and 1700 zone required to confirm the downside is for now protected, and a possible further extension higher would be the likely scenario, as most of investors now, due to the uncertainty over the European crisis that shows no firm signals of any recovery, are turning back into the number one safe haven instrument, which is gold. That was all for today, Tuesday, 19th of June 2012. We would like to thank you all attending our live sessions. For all those that connected later, you could find the whole session recorded and uploaded in the YouTube at our page called Windsor Brokers Forex, where you can find also a number of technical analysis for the major currencies and the commodities. That was all, as said, again for today. We expect you tomorrow again at the same time at 7:00 GMT. Until then, stay with us as the questions and answers session will follow. Good luck.